Sumeet Bagadia, Associate Director at Choice Broking, is now joining in. Good afternoon, Sumit. Thank you so much for taking out time for us. You, of course, look at technicals, charts and patterns. In the last 15-20 days, one thing is that markets have not been falling, irrespective of any news, whether it is positive or negative. But at the same time, even if there is a positive news, we are not seeing any major activity on the buying side. So do you think it's classical base formation that we are seeing? We have a couple of events lined up. December is coming where people would go on holiday. So it's classical base formation around the 7,800, 7,900 levels?
Hi Pankaj, well, very good afternoon to you. Well, as far as the market view is concerned, I think there are a couple of events pending on. First of all is GST is due. Secondly, Fed meeting is due next week. So based on these, there are various move will come on based on these directions. Market will take place based on the GST outcome and the Fed outcome. If the GST outcome is positive for the economy and if they pass on the GST, then that would be a positive. Then that would give positive impact on markets. And because of that, markets are not able to take direction at these levels. Also, technically, if we see from 7,800, market has moved up by 150 to 200 points and presently is facing at a resistance at around 8,000 levels. 8,000 would be a very psychological level, and it's a major resistance zone. So till that time 8,000 is not taken away, and on downside we can see that there is a put writing happening at 7,900 levels. So major support comes at around 7,900 and the resistance which comes at around 8,000 and 8,200 levels. So I think till that time prices doesn't give breakout above, or Nifty doesn't give breakout above 8,000 and 7,900 below, it would move in a range. And as soon as the outcome is clear from GST side and as far as Fed interest rate hike is concerned, we will see a sharp movement in the markets in next couple of days. At present, we can say that there is a base formation happening somewhere around 7,800, 7,900 levels. So till the time these key levels are not taken away, we can be a buyer on dips.
Right. So what you're saying is that to take out 8,000, it will be difficult, and that's why we need some news flow to be backed by it. So maybe Fed comes out and gives a positive outlook, or some big fundamental change happens like the GST. So only then markets with volume will be able to take out a few levels.
See, the first effect would come from GST. If GST is given in this session itself, then that would give a positive impact on the market. As far as Fed is concerned, see, if the Fed raises the interest rate, then on the spot that would give negative impact on the markets. Why? Because dollar index is getting strengthened day by day, and because of this, FIs are pulling out their money from India and they are moving out to dollar index, and they are putting their money in currency markets. So on the spot, if the Fed raises the interest rate in next week, then we can see a sell-off of 100 to 200 points in Nifty. And if by chance Fed does not increase the rates, then there is a possibility that we might see a breakout from 8,000 levels because of Fed not raising the rates.
But as they say in the markets that a widely anticipated event, dollar has seen a run up. Don't you think that once this event is behind, dollar would probably see a sell-off coming in?
There is a possibility, Pankaj, that dollar might give sell-off, but at present, looking at the charts, it seems that dollar index, I'm talking about dollar index, which has given a breakout above 100 zone, 100 level, psychological level 2, as well as resistance levels 2, and above sustaining above $100 will take a dollar index to 103 and 104 levels in short term. So as far as very short term trading view is concerned, on the spot reaction on dollar index would be 103 levels, and from there we can see a consolidation or a small correction in dollar index. After that, we will see that equity markets will give sharp upside rally, but on the spot reaction would be a correction of 100 to 200 points, and these dips of panic reaction in market should be used as buying opportunity. So overall, in any case scenario, we feel that dips in Nifty or a market should be used as buying opportunity for a time horizon of at least minimum 3 to 6 months.
Right. Let's as the activity overall is low and a lot of events are anticipated. Let's talk about some names. Can you tell your view on TVS? It's down about 4.5–5%. Some of the other two-wheeler names are doing actually quite well.
Yes, of course. See, as far as TVS Motor is concerned, from 230 levels, we have seen a good amount of appreciation in TVS Motor, and from there we have seen an appreciation of around 25%. Recently we have seen a high of around 310 levels, and today it has moved down because we have seen flood problem in Chennai, and because of that I think sales are affected. So this is a very short-term reaction on TVS Motor, and because of this there is a possibility that we might see a small correction of 2 to 3% from present levels. But overall I feel that auto sector is very strong. As far as TVS Motor is concerned, I think these levels are very good to initiate long position, and if by chance there is a small correction of around 5 to 8 rupees from present levels, then that should be used as buying opportunity for an immediate target of 305 and 309 levels. The final resistance on TVS Motor would be at around 310. The day TVS Motor gives breakout above 310 levels, then we can see a sharp upside rally till 340 or 350 levels. Overall, the view on TVS Motor remains positive. Any dip in stock should be used as buying opportunity.
What would be your view on Motherson Sumi? You know, a lot has been spoken, a lot of noise about Volkswagen and how it will impact its numbers. It's down about 2.5%, been a big underperformer after making recent highs. How would you look at Motherson Sumi?
See, as far as overall view is concerned, overall view is positive. Presently, because of the news and because of the small correction, because of the small support broken in Motherson Sumi, we have seen a small correction. Today, it's down by 2.8%, and the price are quoting at around 284 levels. We feel that in short term, there is a possibility that we might see correction of around 8 to 10 rupees from present levels. But the overall horizon in Motherson Sumi looks lucrative to me. We feel that anytime prices near 275 should be used as buying opportunity in Motherson Sumi, and on higher side, it will face resistance at around 300 or 310 levels. The day it gives breakout above 300 and 310 levels, we can see upside rally till 350 levels in Motherson Sumi. So I think dips in prices till 275 or 270 in Motherson Sumi should be used as buying opportunity.
Right. You know, as far as some of the other buzzing stocks today are concerned, from the aviation pack, how would you look at Jet and SpiceJet? You think that they can still give good returns from here on?
Yes, of course. See, as far as Jet and SpiceJet is concerned, from past couple of days or couple of weeks, I should say, they have been giving a very good upside move, and they have given a very good upside return. And presently also, they have given a breakout on charts, especially as if I talk of Jet Airways. I think from present levels too, there is a upside potential of 50 rupees from present levels. So one should still initiate long position in Jet Airways or SpiceJet at CMP. And if anyone is holding positions in Jet Airways or SpiceJet, then they should continue holding their positions till the time these two stocks doesn't give correction of at least 5% from present levels. As far as SpiceJet is concerned, I think SpiceJet has potential to touch levels of around 85 to 90, and on downside it does not, till the time it does not give a break or close below 60, it's strong. So anytime dips in prices till 67, 68 or at present levels, SpiceJet is a very good buy for the immediate target of 85 and then 90 levels.
Right. GMR Infrastructure has started to see an up move. It's started to look pretty strong. Every time it's going down, it's attracting buying. Do you think it's a name which can do well from here on?
Well, Pankaj, see, as far as infrastructure space is concerned, we feel that in next couple of months, we will see a good upside rally in infrastructure space. As far as GMR is concerned, see, it was not a good counter to trade in and invest in. But as far as present scenario is concerned, from past couple of days or from past 10 to 15 days, we have seen a move of around at least 5 rupees from lower levels. And presently also, we can see that it has given a breakout. And from here, I think the story will change. As far as GMR levels are concerned, I think from present levels, we can see a very sharp upside rally and a move till 25 rupees. That means from 17 levels to 25 rupees. And on downside, immediate support comes at around 16, and the overall positional trader support comes at around 14 levels. So for traders who are short-term traders, should maintain a stop loss of 16 rupees and should initiate a long position. As far as positional trades are concerned, one should maintain a stop loss of around 14 rupees and one should initiate long position at CMP or on dips in prices till 17 should be used as buying opportunity for an immediate target of 20 rupees. And if 20 is broken on closing basis, then a further upside rally can be seen till 23 or 25 rupees. So overall, GMR Infra looks positive. It looks good. One can initiate long position at CMP2.
Right. Can you just talk to us about Indian Hotels and EIH? Very, very we generally don't speak about these names, but today these names are up 10.5%. Do you think that's a space which is attracting buying? What is the next thing that we should wait and watch for?
Well, I don't think that we will see a sharp rally in these type of stocks. As far as EIH Hotel is concerned, see, today we have seen a good move in this stock. We have seen almost a move of around 8 to 10 rupees. But I think these stocks will face resistance at around 127, 128 levels as far as EIH is concerned. So till that time it doesn't give breakout above 127, 128 levels, I think one should avoid fresh position at these levels. And if anyone has taken a position, I think they should trail their stop losses to somewhere at around 121, 122 levels as far as EIH is concerned. And as far as Indian Hotel is concerned, same view with the Indian Hotel. I think one should book profit or should trail their stop losses because overall I feel that these stocks will face resistance, and if the resistance is not taken away, then again we can see sell-off from these levels.
Right. Any word on Dr. Reddy's? Big underperformer last 3-4 days. Decent buying scene.
Well, I'm bullish on pharma sector. I feel most of the pharma stocks will perform better in next couple of months. As far as Dr. Reddy is concerned, see, it has given a sharp correction from 4400 levels, but presently it looks very good to me. And on downside, I think the Dr. Reddy has major support at around 3100 or 3000 levels. So till that time, 3100 or 3000 levels are not taken away on closing basis, I would be a buyer on every dip. Level somewhere at around 3250, which is the current market price, or on dips in prices till 3200. I think Dr. Reddy is a very good buy. And on higher side, I feel in short term it will face resistance at around 3450 or 3500 levels. The day it gives breakout above 3500, I think Dr. Reddy will again start its or again resume its uptrend, and on higher side we can again see levels of around 4000 or 4500. But in short term, one should initiate long position at CMP. Till the time 3100 or 3000 levels are not taken away, we are bullish on Dr. Reddy. And on higher side, we can easily see levels of around 3500 and above 3500, 3700 levels.
Right. As you said that you're bullish on the pharma space. Last 5 years have been phenomenal, if you have been an investor in the pharma pack. But now you think returns would get slightly stock specific, not that all the stocks may tend to go up and, only selected names would tend to do well?
Yes, I think you're absolutely right, Pankaj. See, all the stocks may not perform, but as far as view is concerned, see, pharma remains looks good at CMP2. And as far as stock specific are concerned, then a few of the stocks which I can name at present are Lupin. Lupin looks good to me. And one more stock that which looks good to me is Wockhardt Pharma. Dr. Reddy we already spoke about. And Sun Pharma has given a sharp correction in past couple of months. But at present levels, we feel that it will take support at around 750. So on lower levels, Sun Pharma is also good. So as far as stock specific selection is concerned, one should remain invested in frontline stocks. And in frontline stocks, I think the investors will get return of around at least 15 to 20%. So to name few, Wockhardt is good, Cipla is good, Lupin is good, Dr. Reddy is good, Sun Pharma is good. And if anyone wants to select one or two stocks, then they should select Cipla and Lupin at present levels. Cipla from present levels can give a rally of around 100 rupees. That means minimum 15% upside appreciation we are expecting from a level of 650, 655. We are expecting Cipla to touch levels of around 725 and 750. As far as Lupin is concerned, Lupin C presently quoting at around 1865, and in past couple of weeks we have seen that it has given a correction from 2100 levels. I think these are good levels to initiate long position. 1850, 1860 is a good levels to initiate long position for the targets of around 1950 and 2050. One can initiate long position at CMP, and on downside it will have support at around 1790 or 1780 levels.
Right, right, Sumit. Thank you so much for taking out time for us. A pleasure talking to you.